Good afternoon and welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Vivek Iyer, and joining me shortly is Hormaz Fatakia as well. Well, it's a day where we're actually seeing a little bit of a sell-off, especially as far as the Bank Nifty is concerned. Bank Nifty trading near the day's lowest point. We have quite a lot lined up on the show. It's an action-packed show. Let's start off with the top headlines. Indices give up morning gains to trade near the day's lowest point. The Nifty Bank slips 0.5%, led by large private banks. Defense stocks gain for the second straight session. Metals and realty stocks also rise, with mid-caps putting up a better show. Tata Elxsi gains after it collaborates with Mercedes-Benz R&D India for vehicle engineering and software-defined vehicle development. The stock up over 2%. ITD cementation in focus after reporting a good set of Q4 numbers. Revenues up 9.8%. EBITDA rises 17.6% on a year-on-year basis. The company also secures orders worth nearly 600 crore for construction of various infrastructure works at Jaipur International Airport. Aditya Birla Capital rallies more than 6% after bullish brokerage notes. Macquarie issues an outperform call with a target of 260 rupees a share, while Morgan Stanley issues an overweight rating with a target price of 250 rupees a share. Both cite a steady quarter as key reasons. Max Financial Services total APE met street expectations, while value of new business was a beat. Management tells CNBC-TV18 that they will try to grow 3 to 4% higher than private insurance players. Well, overall, it's a steady session, but what we are seeing, especially in the last hour and a half, has been the fact that there has been selling pressure witnessed both by the Nifty as well as the Bank Nifty as far as higher levels are concerned. Select NBFCs like REC and PFC have been under pressure. This on account as far as guidance trimming is concerned for AUM growth in the conference call that was just underway. But a whole host of other stocks is what Hormaz has on his radar. Hormaz today has gone by to the wall. Hormaz, it's an action-packed session. A lot of earnings reaction is something that we're seeing too. Take us through the top movers.
You can't take your eyes off the defense names, earnings or no earnings. And if you look at the shipbuilders in particular, they have been on an absolute tear. With the likes of Garden Reach reacting to results 17% higher on the stock. Cochin Shipyard too is up 11%. Mazagon Dock, all of them are slightly off the highs of the day, but they are still trading with very, very substantial gains in today's trading session. Some of the others that are reacting in today's trade include the names are the MSCI additions, and particularly the small cap names. Look at Atom Investments, Acme Solar, Sai Life Sciences, all of them 5 to 10% higher on news that they will be part of the MSCI small cap index from the 30th of May. Now, if you look at the earnings reactions as well on both sides, but the negative ones in particular, look at Syrma SGS is now down 7% at the lowest point of the day, as is Metropolis, and REC is not an earnings reaction, but the management cutting its AUM growth guidance for FY26 has led to that sell-off on the stock. Stocks that are doing well on the back of volumes today, and they include the likes of HBL Engineering after the Kavach approval that it received. Linde India too is up 5.5%, and Aditya Birla Capital, as you just highlighted, 7% higher on some positive brokerage commentary on very strong volumes in today's session. And lastly, the railway PSUs too continue to do well for themselves as they have been over the last week, and Railtel, Ircon, Titagarh, all of them seeing gains of anywhere between 5 to 7%, Vivek.
Thank you so much, Hormaz, for joining us, giving us a good sense of what exactly is transpiring in terms of stock-specific action in the broader end of the markets. But it's a very good time to welcome Rajesh Palvia from Axis Securities for a technical check on the market. Good afternoon, Rajesh. Thank you so much for joining us. First up, give us your view as far as the Nifty and the Bank Nifty is concerned. Some profit booking seen at the higher levels. Do you see further upside, or do you see some exhaustion at the current levels?
Good afternoon, Vivek. So, Nifty is still holding the important support area of 24,500, which is the major put-based concentration. So for near-term perspective, 24,500 is likely to act as a good support area, as overall, buying interest is still intact around those levels. But on the higher side, 24,700 to 750 are the major call concentration area. So I think we may remain in the range for some more time in the Nifty and consolidate further 24,500 on the downside, and 24,700, 750 would be the higher band for the Nifty. But definitely some substantial profit booking has been witnessed in Bank Nifty. Most of the large cap private bank have shown some profit taking, and Bank Nifty has broken its 10-day moving average in today's corrective move. But still, looking at the medium term to short term structure is still on the positive side for Bank Nifty. But yes, maybe some pressure would be there for near term perspective. On the downside, 54,500, 54,400 are the important and key support area for Bank Nifty. If at all Bank Nifty able to defend these level, some support buying action can be there around those level. But on the higher side, 55,000 to 55,200 are likely to act as a supply zone for near term perspective.
What about specific stocks, Rajesh? On the broader markets, index names, what are you tracking this afternoon?
So the mid-cap space is doing good, and a lot of mid-cap stocks are showing good traction in terms of buying. Exide Industries looking attractive. The way stock recovered after a brief correction. I think here we may see good traction further towards 395 to 400 kind of zone. So one can look to buy this stock with stop loss of 372. Another stock that we like at this juncture is NBCC. Stock managed to give breakout of its multiple supply zone. And looking at the weekly as well as on the daily structure, we believe that here also we could see further more traction. 112 to 115 would be the next target. Keep your stop loss around 103. And Genius Power, another stock, is looking very promising. The way weekly charts are now shaping up, stock now managed to cross 100-day moving average. So Genius Power can extend its gain towards 330 to 340 zone. This stock's also looking attractive for buying side. One can keep his stop loss around 310 to buy Genius Power also.
Thank you so much, Rajesh, for joining us. NBCC and GS Power are the two stocks on your radar. Well, moving on, we'll now slip into a short break. But while we slip into that, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
News18.com marches way ahead of the Times of India with 38% more users on native and social platforms. Network 18, the undisputed leader of news networks.
Welcome back. And one of the other earnings reactions that we are witnessing today is Siemens. Numbers, of course, came during market hours yesterday, and they are higher in today's session despite a tepid quarter that they had. Upasana is joining in to tell us the key factors that are contributing to this up move today. Upasana.
Certainly. First up, let's note that the company's demerger of energy business is effective from 25th of March 2025 onwards. Now, Siemens Limited ex demerger Q2 SY25, if we look at the overall result was tepid, but order inflows this quarter remained quite strong. Revenue was in line with Nomura estimate with an uptick of 3%, while EBITDA margin, net profit missed Nomura estimates. Now coming to EBITDA, it saw a downtick of 27% on a YoY basis. EBITDA margins under pressure, down about 436 basis points at 11%, and PAT was also under pressure, down 37% at 407. Now PAT declined due to under absorption of fixed cost and higher cost of materials in digital industries business. It was also impacted by extraordinary gain of 192 crore in Q2 SY24 and also demerger expenses of 63 crores. Now Motilal Oswal has given a neutral rating on the stock with a target price of 3,200 per share. It says that the digital industry segment continued to see demand slow down, but order inflow for company's non-energy entity were healthy, up about 44% on a YoY basis, which provides a good revenue visibility for future. It expects execution to ramp up in FY26, FY27 on the back of strong order inflows, and it also expects a CAGR revenue growth of 11%, EBITDA growth of 13%, and PAT growth of 10% from FY24 to FY27. Hence, we can see the stock moving up in trade today on the back of strong outlook and order inflows.
Thank you so much, Upasna, for joining in, giving us a sense of Siemens. Remember, Siemens operationally was a miss as far as what the street was anticipating, but the strong order inflow, similar to what ABB witnessed, has led to quite a big up move. Well, talking about another stock that's doing very well in the session after its Q4 results, that is IT Cementation. IT Cementation came out with its numbers last evening. Having a look at the numbers themselves, strong top-line growth, almost 10% higher on a year-on-year basis. The EBITDA coming in quite strong at close to 260 crore, which is an indication that the core EBITDA has moved higher by close to 18% on a year-on-year basis. Margins too have expanded almost 70 basis points and profitability higher by 27%. So the strong operational performance has led to a 27% up move as far as the profitability is concerned. Now, talking about the Q4 order inflow itself, coming in at close to 803 crore. FY25 order inflow at close to a little over 7,170 crore. And when you're talking about the order book quite steady, 18,300. However, when you're looking at it on a year-on-year basis, it's moderated compared to at the start of FY25. They actually had an order book in excess of 19,900 crore. Now, when you're talking about one update, the company said that yesterday they received an order of close to 600 crore. Now, this is for infrastructure works as far as Jaipur International Airport is concerned. FY25, the profitability moved up by close to 36%. Hormaz, the other important thing to keep in mind as far as ITD is concerned, the promoter is no longer Thai. It's now an Indian promoter. The Adani Group now owns majority stake as far as ITD is concerned. So that was the other major factor that played out as far as ITD cementation is concerned for FY25.
Oh yes, 9% higher now. Slightly off the highs of the day though is ITD cementation, but still holding on to healthy gains as we speak. So almost last 2 weeks has seen the stock surge about 25%. So healthy gains for ITD cementation. But what's not been in the pink of health today is REC. It started off well, but after the earnings call began and the management cut its AUM growth guidance for FY26, the stock is facing selling pressure and now is down to the lows of the day. Vinny is here with more on this. Vinny.
Hi, Urma. So, yes, absolutely. We're seeing that REC is trading at the lowest point of the day. Now, at the beginning of the con call, only they said that the AUM guidance, now they've given a new one, 11 to 13%. The previous guidance was in the range of around 15%. Until Q3, they were very confident that this would be something that would be sustaining. So that is something that is coming surprising for the company side. So AUM guidance now for FY26 is 11 to 3%. They've cut that. Loan book target, what they've highlighted, 10 lakh crore rupees by 2030. That target is still on track. They are targeting a 12% annual book of loan growth that one could see coming in from REC. NIMs, that will continue to be in the range of 3.5 to 3.75% in FY26. Infrastructure is something they believe will lead the growth, especially coming in terms of the NIM side as well as spread going forward, and that will be something that will support the growth. Regulatory environment, the company highlighted, has been stable. They're targeting a net zero NPA status by FY26, and generation projects are yielding around 10 to 11.5%, which is expected to support the margin sustainability going forward. So the main blip that came in today from REC was in terms of AUM guidance, which was being cut in terms of concerns on that front.
Thank you so much, Vinny. REC trading near the day lowest point of the day, and along with that, PFC that's yet to declare its results, that too has seen a rub-off effect, and PFC too is under pressure today. But another stock, from the NBFC pack, but that's seeing contrasting fortunes, is actually AB Capital. AB Capital, this particular stock is up almost 7%. Nigel joins in. The company declared its results yesterday. Whole host of brokerages have reacted. Nigel joins in with more details.
Well, that's right. Aditya Birla Capital, in fact, is higher in today's trading session. I've picked out two big brokerages that are fairly positive. First, Macquarie, they have an outperform rating with the target price of around 260 rupees. They say that the profit and the AUM was in line with expectations. Now, all eyes are on the slippages, particularly in the unsecured business segment, which will be important. On AB Sun Life Insurance, out there, they're saying the performance actually was better than expected. So they're quite positive out there. And they're also highlighting that the management is targeting to double the NBFC AUM as well as the VNB in the next 3 years. So that's why we have Macquarie that's positive. Moving to Morgan Stanley, they as well have an overweight rating with a target price of around 250 rupees. They see a steady improvement and better outlook across businesses. They're saying that the NBFC, which is the largest business, the performance out there was in line with expectations. While they also go on to make this point that they are seeing a margin of safety and there is scope for a re-rating as well. Explains why AB Capital as well is doing well, because both the brokerages Macquarie and Morgan Stanley are optimistic on the business prospects.
Yes, 7% higher there on Aditya Birla Capital. Nigel, thanks a lot for that. And the other one that's not having a very good reaction to its results is Metropolis, and Ekta is here with that fine print. Ekta.
Thanks for that. Well, yes, revenue was up around 4% this quarter. Street was anticipating around 8% growth. Margins came in at 18%, and the profit was under pressure as well. The company did say that the Q4 margins were impacted because of nil margins from Core Diagnostics, a recent acquisition by them, lower than usual revenue in Feb in focus markets, and the 3 acquisitions, one of them being Core Diagnostics just in the past couple of months. Now, in terms of a couple of key metrics, True Health, their preventive testing segment, who did well, was up 20%. Specialty Diagnostics was up around 11%. In terms of a couple of key takeaways, they did mention that there were lower volumes in Feb. Q1 revenue build-up will be in line. They expect around 12% growth in FY26. But the street, remember, a lot of the analysts were expecting mid-teen growth to come through. They also expect 1% expansion in margins in FY26. That is because of the acquisitions which they've undertaken. They, however, have said that the phase of heavy capex is over and will be looking at accelerating their collection centers going forward.
Thank you so much, Ekta, for joining us, taking us through the earnings fine print as far as Metropolis Healthcare is concerned. But the other stock that's doing quite well is Max Financial Services. It's up almost 4%, reacting to its Q4 earnings. Their total APE numbers met street expectations, while value of new business was beat. Earlier today, we spoke to Prashant Tripathi, the MD and CEO of Axis Max Life, on their performance and growth outlook. Let's listen to excerpts from that conversation.
Began the year with positivity. And, it's very hard to give an absolute number on growth, but I must share with you that we'll try to maintain 3 to 4 percentage points with respect to the private average growth. So if the private industry grows at 13%, you should add 3-4% more for our growth expectation. And in terms of margin, while we finished at 24%, we'll definitely target a range of anywhere between 24 to 25%, trying to increase it further. Q4 generally is the highest sales month where we get the leverage on the business, and hence our margins are typically highest in Q4. That's been the trend always. I must say 28% is the higher end of the margin, so you shouldn't expect margins going beyond of that. We look at the impact, but we then deploy corrective mechanisms to take care of the margin impacts. On a net basis, I will say the impact was less than 50 basis points for the second half of the year, because we almost nullified the impact by the corrective mechanisms that we deployed in Q4. As we look at next year, I think it should have a minimal impact, because we'll look at product mixes, we'll deploy certain products which will have inherently more margin. So we'll take care of the impact of surrender regulations on overall margin.
The management there of Axis Max Life, and the numbers of APAR Industries were flashing on your screen just a few minutes ago. Revenues and profits were higher. Margins were slightly narrower, though, on a year-on-year basis. The stock has seen a bit of a choppy move after the earnings announcement, still trading with gains of around 1.25%. Vivek, APAR Industries, 5 years ago, the stock was at 300 rupees. Now it's at 6,600 rupees, and this is after the stock is down 44% from its highs. So it has gone up to almost 12,000, and now trading at around 6,600 rupees is APAR Industries. So clear the kind of returns that the stock has delivered over the last 5 years. We'll take a short break. More on the markets on the other side. Stay tuned.
What was the one that surprised you? What was the one that you were absolutely sure of?
Barfi was one which was the most difficult to pin down, but you knew it at a visceral level, you reacted to the material. Chennai Express actually was another film where, there was a full narration that happened with a group of 20 people, and we were laughing off and like falling off our chairs.
What was a casting call that you made that kind of worked out the way that you had imagined it to?
I think probably Dangal. And at that time, of course, Irfan, he was someone we had in mind. He would have done a wonderful job. But then I got a call from Amir at that time. Many other stars of his stature might not have been okay with playing an overweight wrestler who's like a bit of a has-been, who's living out his dreams through his daughters.
Welcome back. Now, government sources are saying that only 25 days of coal stocks are currently available at pitheads at thermal power plants. Abhimanyu is joining in with more details on this. Abhimanyu.
While the mercury is rising across the country, ample coal is available at pitheads. That's the word coming in from the government. Government sources have told CNBC-TV18 that around 25 days of coal stock is available at pitheads and thermal power stations across the country. Now, this is despite an increase in temperatures which has been noted in the past few days. Also, there have been several patterns with respect to different regions, and these regional patterns are also governing the kind of power demand in respective regions. While places like Gujarat and Telangana have witnessed heat waves already, and due to several heat waves being witnessed, the projected peak demand for power has already been witnessed in these particular states. However, in places in North India, there have been several showers and several reliefs in terms of rain, and that has led to some cooling down of temperatures, which has ensured till now that the projected peak demand has not been achieved. It remains to be seen how the situation is going to pan out, even as the government is working to improve last mile connectivity in terms of transportation of coal and logistics to ensure that it's not just high production of coal, but also last mile connectivity, which will boost power generation and will provide ample coal not just to the power sector but also to the non-power sector like the steel sector. The government is also looking to beneficiate coal in a large way to ensure that purification of coal takes place even before transport, to improve overall logistical efficiency and to also save on infrastructural costs while transportation of coal.
Thank you so much, Abhimanyu, for joining us and with those important updates. But moving on, life insurance stocks are reacting to their April business updates. Yash is here with more details on April performance of various insurance players.
Well, so if we start with the industry, the life insurance industry in the month of April has grown its premium by about 8%. Private life insurance companies a tad bit lower with a growth of about 6%. APE for private industry growing at 8%. Retail APE growing at just 2%. Now let's speak about individual players. The strongest performance came from Axis Max Life Insurance, and that came on a strong base which the company had as well. Premium growing at 17%, APE growing at 23%, retail APE growing at 24%. After Max Life, Axis Max Life Insurance, it was HDFC Life Insurance. The premium growing at 23%, APE growing at 10%, and retail APE with a growth of 3%. ICICI Prudential Life Insurance, it was a weak growth, but the company had a strong base to work on. Premium growth of 10%, APE growth of 5%, and retail APE a contraction of 16%. SBI Life, again weak growth, but had a strong base to work on. Premium growth of about 0.3%, APE growth of 8%, and retail APE growing at about 2%. Finally, LIC, premium growth of 10%, coming in at about 13,611 crore rupees. APE, a contraction of 11%. Retail APE also contracting in the month of April by about 4%.
Yash, thanks a lot for that. And the life insurance players as well, they're in focus. By the way, HBL Engineering, we just mentioned that at the start of the show, now is 10% higher as we speak. There are numbers of rights that were flashing at the bottom of your screen just a few minutes ago. And railway stocks have continued to do well all through this week. And rights are reacting to its results, still holding on to gains of around about 4%. That other railway stocks, though, are continuing to build on to those gains. Railtel is now up 7%. Titagar is now up 6.5%. Ircon is up 6%. So railway PSUs are hogging the spotlight, and that's been a while since they did that. So coming on the back of some strong moves in today's session, some numbers flashing on your screen as well. Responsive Industries, profits growing up 18% from last year. The stock, though, trading with gains of around 3 to 4%. So numbers continuing to trickle in thick and fast. And pull up HAL as well. See how the stock has moved after its results. The numbers on a year-on-year basis were lower than expectations, but have been a convincing beat on estimates. So 3.5% higher on the stock, a very sharp spike after falling off the highs after the initial print. With that, we call time on this edition of Midcap Radar. From Vivek, me and the team that put this show together, thank you so much for watching. Your stocks when we return.